Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, December 17th, 2015. Well, folks, markets are down about $1.60 on the day. We're off the lows, coming back, as you can see here. This is the intraday SPY chart, and again, this mirrors the S&P 500. Now, the key here is many people are saying, well, is this negative going into the end of the year, or is this positive that we're having a down day? I actually look at it as a positive. Okay, so today, going into today, after the massive move up yesterday and really the previous couple days, and again, you can see it right here, the markets went from 200 on the spiders to 208.50. So that's an 8.5 point move in 3 days. 1, 2, 3. So you have to expect some sort of pullback. Now, you could argue that today's pullback is a little bit bigger than just kind of a small pullback, which I agree. However, you have to factor in oil. So again, if you look at oil, right, oil's down 20 cents, new lows on oil, oil trading on spot crude below $35. That's very scary to the markets. So the way I look at it is this. If the markets are just down $1.50, $1.60 right now, with oil down and with the massive rally we've seen in the last few days, I'm in the camp for an end-of-year choppy but general float higher. And again, I think that eventually, whether oil goes down another $1 or $2 on spot crude, eventually I think in the year end, you'll see a little bit of a float up. And I think in January, early January, once tax loss selling's done, once you kind of have portfolio managers figure out where they're going to position themselves, and most of them are selling oil if they have it because they don't want to show it on their statements at the end of year. I think once that's done, you're going to get a nice pop in January. In fact, I have an upside target of $45 to $50 in January for oil. Now, again, I think that's early January. I want to make that clear. I think by mid to late January, you're going to see a pretty powerful fall on the markets. But right now, again, I'm going to go with a neutral to upside bias into year end based on today's move. And again, this is contrary to what a lot of people would think about, right? Because they see the markets today, oh, this is bearish. This could mean end of year selling. You know what's going on here? No. You have to look at it like we've just rallied 8.5 points on the spiders, which is 85 points on the S&P. Today, you're down about 15 to 16 points on the S&P. So that's not even that big of a pullback considering the rally we had. Then factor in oil being down today at the lows, at the 52-week multi-year lows. Then you kind of get a clearer picture. So I want you guys to really understand that. Now, again, could we change that outlook? Well, yeah. I mean, if the market started to fall all the way back down and took out 203, 203 is kind of my base point. I don't expect, I think maybe we test 203 in choppy markets in the next week or so, but I would be very surprised if we got through that. And there's a gap fill right here at 203. I would be a buyer of the S&P right there if we got down there. There's no doubt about that. Now, if we could take that out and we start going into this range to the lows, then that would be bearish. But I don't expect that, folks. I don't expect that at all. So we'll, again, watch and see how things play out. In tune with that, we took more profits off the table today, guys, in the Research Center. And by the way, November, December has been a year to remember in the Research Center. Take a look here. Not VVUS. There was VLTC was the one we took off the table today. And again, look at this, up 22% today, so we took a profit there. Nice profit on VLTC. And I want to show you this, guys. We had our third party verify our track record, and they do it every month or so. So we update the track record when they verify it. Obviously, it's third party verifying. We want to make sure we're as transparent as possible. But here's our website, and what you want to do is you just want to go here to the Research Center track record, and here was what you have. For the year now, as of really today, you have 864.4% net profit. Now, again, granted, that would be if you put all your money in every position, but what you do is, let's just say we recommend 10%, which is what we do. 10% of your portfolio. If you have $100,000, you put $10,000 in every trade. If you have $10,000 portfolio, you put $1,000 in every trade. If you did that, you would be up 86.44%. 86.44% if you took every position and you closed out all these positions that we've closed out. That is incredible. And you can see, I mean, we have losses here. 7% here, 0.5%, 10%. I mean, there's no doubt about it. We have some losses on this track record for the year because it's obviously legitimate. But again, bottom line is, I mean, look at lately, guys. We've just been killing it. Absolutely killing it. Look, 27.5% on VLTC. We just closed out VLTC for another 11% today. All right, 17.8% on U.S. Steel, TNA. You name it. And what's beautiful about this is, most websites out there that make these type of gains are trading microcaps. We don't do that. Well, listen, I trade occasionally a small cap, but mostly, I mean, look, TNA is an ETF that tracks the Russell. U.S. Steel is U.S. Steel. VXX is volatility index. VLTC is a small cap. TZA is an inverse Russell. QID inverse NASDAQ. All right, Pfizer, Skechers, Biotech, Facebook. These are what we're trading, and this is where what we're making. And I mean, you can literally go out there and look at hedge funds. The best hedge funds haven't performed at an 86.4% profit ratio. Most are negative. Some of the big names are even down 10, 20% for the year. So that's incredible, guys. And you can see the options alert track record. Take a look here, 3,200%. Now, again, you obviously put way less in an options trade. We recommend 1 to 3% of your portfolio, but even if you did that, you're still up a couple 100% on the year if you took every options trade. And again, third-party verified. Look at all these options trades, and again, look at all that green. And this is your net gain. When you take all your winners, subtract all your losers, 3,200+%. Incredible. All right, guys. Bottom line is, my recommendation is if you're an options alert member, you do the options alert. Otherwise, you take the free trial to the research center, which is where you get all of those swing trades. And this is what you get. And again, there's a 7-day free trial. Come join us here at InTheMoneyStocks.com.